You've seen it before. XRP pumps, then crashes. Headlines scream, XRP to $1,000. 1 week and XRP is finished the next. But here's what almost no one asks, not how high XRP can go, but how long it actually takes to make real money. Because the real difference between those who build wealth and those who get wrecked isn't luck. It's time. So today, we'll break down how long you need to hold XRP before it becomes truly profitable. No hopium, no hype, just truth. Let's get into it. The biggest mistake XRP investors make isn't buying too high, it's expecting profits too early. Most people left assuming the story was over. But in 2021, XRP climbed back near $2, not even a new all-time high, yet early believers who held through the chaos made life-changing returns. That's the patience premium in action. Timing the market feels clever, but time in the market wins every cycle. The ones who survived FUD, lawsuits, and boredom didn't outsmart anyone. They just outlasted everyone. If you want to know when XRP becomes profitable, there are 3 major timelines to understand: market cycles, regulation, and utility. First, market cycles. Crypto runs in roughly 4-year waves, following Bitcoin halvings. Liquidity rotates from Bitcoin to altcoins and back again. Historically, the distance between market bottoms and tops is around 2.5 to 3 years, while a full cycle lasts about 4. If XRP's macro low was near 33 cents in late 2022, the next realistic profit window opens somewhere between mid-2025 and mid-2026, exactly when liquidity and risk appetite tend to return. Second, regulation. Legal clarity in 2023 to 2024 unlocked new possibilities: ETFs, institutional custody, even bank-grade adoption. But big money moves slowly. Every corridor, pilot, and partnership Ripple launches takes years to scale from test phase to live infrastructure. Even if those foundations are being laid now, the price impact may not appear until 2026 to 2028. Third, utility. Speculation moves prices quickly. Utility keeps them high. XRP's long-term profitability depends on real adoption of on-demand liquidity. Payment corridors across Asia, Latin America, the Middle East, and Africa actually using XRP to settle transactions. Each transaction burns a small amount of XRP, reducing supply over time. The real turning point comes when banks aren't just holding XRP, they're using it. So what does a realistic path look like? If you're trading XRP for a few months, expecting instant profit, you're likely chasing noise. The short-term window, 6 to 12 months, might bring small gains if you time swings well, but it's unreliable. Holding for 2 to 3 years puts you into the heart of the next liquidity cycle, where regulation, ETFs, and real utility begin to overlap. In that window, XRP trading between $5 and $10 becomes a reasonable goal, not fantasy, but conditional on sustained momentum across the market. The long-term horizon, 4 to 6 years, is where conviction compounds. By that stage, multiple corridors could be active. Central banks might integrate Ripple's tech, and institutional rails would be fully operational. If those forces align, a price between $10 and $50 per token becomes mathematically possible. The longer your time horizon, the less your success depends on luck, and the more it depends on adoption. Knowing when to hold is one thing, being able to hold is another. Every XRP investor faces 3 emotional stages. The first is boredom. Prices stagnate, the community quiets down, and social media moves on. Most people quit here. The patient few accumulate silently. Then comes fear. Sharp drawdowns shake confidence. Retail holders panic. Whales quietly buy. This is where your conviction gets tested. Finally, there's euphoria. The market wakes up, headlines return, and everyone starts predicting $1,000 XRP. Ironically, that's when disciplined investors begin to sell in layers. Real profit is earned in boredom and fear, not in euphoria. To navigate these phases, treat XRP like a professional investor would. First, split your holdings into 2 parts. Your core bag, about 70%, is untouchable. You hold it regardless of short-term noise. Your flex bag, around 30%, is for swing trades and profit-taking during strong rallies. Second, plan exits in advance. Take partial profits near $5 to $7 to secure wins. Let the rest ride toward higher targets if conditions stay bullish. By scaling out gradually, you protect your upside without exiting too early. Third, follow real catalysts. Ignore influencers hyping daily candles. Track ISO 20022 rollouts, CBDC expansions, and ETF inflows. Those are genuine liquidity events that can change XRP's value foundation. Patience doesn't mean inaction. It means strategic waiting backed by awareness. History shows that most XRP holders who lost weren't wrong about the project. They were wrong about time. 2020, many thousands sold below 30 cents during the SEC lawsuit, then saw XRP rally several fold after partial legal clarity. Early selling converts conviction into regret. The system rewards patience, not prediction. The difference between a temporary dip and a permanent loss is simply whether you kept your position when others abandoned theirs. While traders look at hourly charts, institutions look at multi-year deployment plans. Ripple's roadmap spans more than 300 financial partners worldwide, from regional banks to global players. It's working with Bhutan and Palau on central bank digital currencies, coordinating with the IMF and the BIS on cross-border frameworks, and pushing its RLUSD stablecoin into banking networks. These aren't speculative events. They're the building blocks of a new financial backbone. But that process takes years, typically 3 to 5 years to move from testing to mass implementation. That's the same window smart holders need to realize full profitability. If you plan to sell before institutional rails are live, you're speculating on hype, not investing in infrastructure. How do you stay patient for years when the market constantly tempts you to react? First, zoom out. Daily candles mean nothing in the long arc of adoption. XRP's historic rallies came after long, quiet accumulation periods. Second, redefine waiting. You're not sitting idle, you're positioning. While others chase trending tokens, you're holding exposure to a network gradually being woven into global settlement systems. Third, watch the silence. When social chatter dies and influencers stop mentioning XRP, that's your signal that accumulation season has begun. When they return yelling, "Next bull run," that's usually your sign to start trimming. Mindset converts volatility into opportunity. The investor's edge isn't having better data, it's having stronger discipline. So, how long should you hold XRP to be profitable? If you're playing short-term games, 6 to 12 months, expect mild gains at best and plenty of stress. If you're holding 2 to 3 years, you're aligning with the next liquidity cycle, ETF growth, and potential regulatory tailwinds. If you're thinking 4 to 6 years, you're giving yourself exposure to the full build-out of XRP's global utility, the phase where conviction pays off exponentially. You don't need $1,000 predictions to win. You just need to survive until 10. Because when the financial system flips, when CBDCs connect, ETFs mature, and cross-border liquidity starts running through XRP, the holders who endured boredom and fear will look like visionaries, not dreamers. If this breakdown helped you think more clearly, hit like, subscribe to WealthyWise Finance, and drop a comment. How long are you really holding XRP? 1 year, 3 years, or 5+? Be honest with yourself. Patience builds wealth. Hype builds exits for someone else. Stay rational, stay informed, and remember, conviction isn't built during bull markets. It's tested during silence. See you in the next one.